interest rate. And that should
What
be the goal.
holds more value, credit or the $1 million man that has the worst credit?
That's a good question. I saw that floating on my social media somewhere. They were debating.
Yeah.
And I guess I can talk a little bit about the different types of financing. So this is another reason not just to go to your bank, especially if you have, if you're self-employed, if not all your money is shown on your taxes. A lot of people do cash jobs on the side. I have a lot of friends that'll do, I don't know, nails, lashes, stuff like that, making good money, but it's not shown on their taxes. So there is private money you can get. So private money is, they're using the house that you're buying as collateral. They just want to make sure that if anything were to go wrong, if you were to default on the mortgage, your house is...
Is that called second mortgages? Or
it's very similar.
Okay.
A lot of second mortgages are private as well, or B lenders. So let me take it all the way back. I'm sorry to bore you guys, but there's A lenders, B lenders, and then private lenders. So in your example, 650 and up, I said we're good for A lenders. Anything under that with your credit score, if you go to a regular bank like Scotia, TD, whatever, they'll turn you away. If you come to someone like myself, we can still get you in, but we're going to put you with what's called a B lender. The difference is they need a little bit more of a down payment. As a first-time home buyer, typically you can use 5%. For a B lender, they want a little bit more skin in the game. So you're going to need at least 20%. You're going to pay a little bit of a premium, but a lot of times...
Pause on that. Could you just stay on that first-time home buyers? Because everybody seems to think they qualify for 5% first-time home buyer.
Yeah.
Before you jump on, could you just stop there and just like elaborate?
I know exactly what you're talking about.
Yeah.
So legally,
like they will argue with you to the T that they qualify.
Legally, the minimum down, the minimum you need down for a property is 5%. But with that 5%, you still have to qualify. So a lot of people want $1 million property and they're like, can I put 5% down? And I'm like, yeah, you can put 5% down, but you only qualify for a $200,000 property.
Based
you know what
on
I mean?
your
Based on your income.
Yeah.
Exactly.
Everything has to align.
Exactly. And that's a lot of times when I talk to people and they can qualify and I say, you have the 5% down. I mean, you can use the 5% down, but your income's here and we need it there. Do you have a potential cosigner? Because potentially you can still put that 5% down, but we need your income up. So you know, dad, mom, can you co-sign for me? I only have this amount, but I want to qualify for this much. So yeah, to answer your question.
Yeah, I think that's super, super important. But I cut you because I want you to elaborate that. It's a question that we get a lot of times.
I know exactly what you mean. Same.
It's very hard to let people know that your income has a big factor without being insensitive. And almost letting them know that just know that there's qualifications to this, not just everyone does.